Welcome, dear traders. Today, the Japanese stock market declined once again, while Australian equities advanced. US stock futures also went up, despite Wall Street suffering another day of losses on Thursday. US indexes finished Thursday's session in a negative territory. The stock market went down again after the Federal Reserve increased interest rates this week. The latest US labor market data, which will be released today, can possibly indicate how big the next rate increase will be. However, this data releases are unlikely to influence the monetary policy of the US Central Bank in the short term. Fed Chairman Jerome Powell reiterated on Wednesday that bringing down inflation is the main goal of the Federal Reserve. He said that the regulator aimed to move interest rates to a sufficiently restrictive level. During the press conference after the FOMC meeting, Powell warned that talking about pausing the Fed rate hike would be premature. His comments dashed market hopes of any pivot to a softer monetary policy in the next few months. The Fed chairman also said that slowing down the pace of interest rate hikes could be appropriate at some point in the future. However, it would require the US economy and the labor market to cool down over a period of time. The American economy has remained remarkably stable so far, despite a slowdown in some sectors. Will today's non-farm payrolls report change the situation? The payroll report will only affect the market if the actual data is greatly below the forecasted increase by 200,000 jobs. According to the FEDWATCH tool, the Fed funds rate market is now pricing in a 53% possibility of a rate increase of 0.75% in December. As we can see, both economic factors and the stance of the US Central Bank favor the US dollar. Over the past day, the US currency has jumped to 113.15, nearly hitting its two-week high. Both the euro and the Australian dollar have dropped to the lowest levels against the US dollar in 14 days. However, early on Friday, the US dollar index retreated to 112.50 against a basket of G6 currencies. USDX is now consolidating ahead of US labor market data. If the non-farm payrolls data matches forecast or greatly exceeds them, the US dollar index can surge even higher towards its best weekly performance in a modern months. This will support the Fed's position on a hike in interest rates aggressively. The US dollar index could rise from the intraday range of the Asian session, 112.41 and 112.99 towards its highs of early September. The US currency has also increased against the Japanese yen, which remains in the 147.70. The dollar yen pair is currently fluctuating in the range of 147.50 and 148.40. However, the yen's movements are quite muted after markets in Japan were closed for a holiday yesterday. Today, Japan's Finance Minister Shinichi Suzuki once again made a statement about the importance of keeping the Japanese yen stable. The currency market remains under pressure from possible Japanese currency interventions, which are aimed at keeping the yen afloat and fighting speculation. Since the beginning of September, Japan has spent $62.8 billion on propping up its national currency. However, these interventions did not give strong support to the Japanese yen. It will be difficult for the dollar-yen pair to begin a strong downward retracement as the monetary policy gap between the US and Japan remains wide. Amid the ongoing uptrend, the yen can settle above the psychological level of 150. Its recent drop to lows near 145 is a good long-term buying opportunity. The Australian dollar also faces downside risks. The Reserve Bank of Australia has fallen behind the Federal Reserve. On a Monday, the Reserve Bank of Australia increased the interest rates by only 25 basis points, putting the Australian dollar at a disadvantage against the US dollar. The economy of China, Australia's biggest trading partner, is slowing down due to the zero-COVID policies and the property market crisis. The wave of interest rate hikes by central banks around the world is increasing the risks of a global recession. By the way, the Reserve Bank of Australia signaled that it could tighten its policy in the future to reach a balance between inflation and economic growth. Such a move could give support to the Australian currency in the future. But today the Australian dollar is on the rise thanks to falling pressure from its US counterpart. The currency pair was trading near 0.6355 early on Friday. During the Asian session, the Australian dollar recovered slightly after dropping last night and settled in the price corridor of 0.6285 and 0.6362. The New Zealand dollar also rose against its US counterparts at the end of the week, recouping some of its earlier losses. And today, bearish pressure on the stock market has begun to ease. The Reserve Bank of New Zealand is very likely to increase interest rates by another 75 basis points in November. As a result, the New Zealand dollar increased to 0.5829 against the US dollar early on a Friday. It's moving in the intraday range of 0.5760 and 0.5832. And that's all for now. Follow InstaForex TV to keep close tabs on financial markets. Our analysts are always ready to answer all your questions in the comment section below. See you soon.